How many times have you taken trades, get stopped out, and finally see the price pushing to your direction? I know, it sucks. To be honest, it has happened to me countless times, not until I discovered liquidity sweeps. Now, in today's video, I'm going to show you on how you can actually avoid that, and most importantly, take better sniper entries and definitely help you make more money, okay? Now, let's start off basically with our presentation. Say you had your sales right around this area, okay? Actually, what happens is the price is going to come, sweep you out, take you out, take your stop loss, and then finally drop to the original direction. Or say you had your buys on the other side, okay? Say you had such a market structure, the price pushing down, then we have a reversal. And off here you have your entry buys with your stop loss somewhere down here. Yep, get stopped out and then see the price pushing to the upside. Well, what's happening is you are becoming the liquidity. Let's understand this in the first place. Well, liquidity is pretty much the money in the market, okay? For the market to survive, there must be money in circulation. Obviously, that's when we have buyers and sellers. So if you're buying, more often enough, you'll be taken out by sellers. And if you cannot notice these areas, then to be honest, it's going to be very, very difficult. Now, before all that, let's understand how the market even moves in the first place, okay? So we basically have three trends, and I believe at this point you guys understand that. So we have an uptrend, okay? And then on the other side, we do have a downtrend, okay? We have a downtrend, oops. Okay, and lastly, we would have a sideways market movement, all right? Now, these are basically the three market movements that we shall always trade, okay? So in an uptrend, we basically need buys, okay? And then off here in a downtrend, we need sales, okay? Now, how do you even confirm that? That's pretty easy, okay? So in here, we see the price forming new highs, okay? So you should at least see the price form new highs. So we have that, oops. So we have a high here, we have a high here. Basically, the price breaking all the previous highs to form new ones, okay? They expect it to do that, to break and then form a new one. Then on the other side, in a downtrend, we should see the price forming a new lows, okay? So we have that, we have that, we have that, okay? So in here, we would confirm that this is a good downtrend. Then on the other side, under consolidation, basically what's happening is the price is just moving sideways. So there is never nothing much. On the other side, one other thing that you need to understand is whenever the price breaks the previous high, okay, you can call that break of structure, all right? So just call that BOS, okay? Then you can also copy that and paste over here. And then we have it here, okay? Same thing in a downtrend, we have it here, then, oops, then we have break of structure, all right? And then we have break of structure. Now, if say we had a reversal, say initially we have a push phase to the upside, okay? And then now we do see a reversal, all right? Okay. Same thing again, we would have a break of structure here, all right? Then we could also have another level here, and then we also have another level here. Now, getting to this point, we need to mark out this this zone over here, all right? See that change. Now, remember, initially we see the price pushing to the upside, and then this could be a reversal pattern. We shall talk about that later on in the video. And then we have that. And then, yep, the price finally breaks out, all right, to now form a new trend, which is bearish. Now, at this break, we would have to call this change of character, okay? Or you could also call it your C or H, okay? Now, again, same thing. Same thing. Now we are now again forming new break of structures in a downtrend. Now keep in mind it was initially an uptrend and now we've seen a reversal and now we have a new trend forming, okay? So we could again still have this. Now it's very, very important to always mark out some of these levels, okay? or let's go ahead and mark out all these levels, because more often enough the price is always going to finally come and react off those areas. So it's very, very important. Okay, there you go. On the other side, you also need to understand that this is pretty much a momentum push, okay? That means we have a lot of buying pressure in to push the price to the upside, then a retracement, okay? Or a pullback, that's how I'd prefer to call it, back to these areas, then more momentum coming in to push the price up, again back here for a retracement, a bit more of a pullback. Well, again, a push phase. Now, what does this mean? Well, it's pretty easy to understand. For the market to move insanely, that means there's a lot of momentum in here. So initially, it does mean that orders here waiting. In this example, being an uptrend, it means that there's a lot of buyers here waiting. They either have limit orders or people are or rather traders actually getting in directly. So there's a lot of money in here to push the market up. Same thing over here. So these areas do generate the momentum push. Same thing in a downtrend, we have these areas over here, okay? So we have more entries in here. We have more money coming in here. We have more money coming in here, all right, to push the market even down. So it's very, very important that you look out for these areas. Actually, later on, you'd notice most of the entries can only be done here, because more often enough, if you come up with entries in here, say the price already in a momentum push, it's like you're trying to chase the price. And what happens is a pullback is coming to take you out or get in a very huge drawdown and probably close off that trade. And yet you could actually make a lot of money. Now, let's go ahead and understand liquidity sweeps, okay? So as I mentioned earlier on, the market needs money to move, okay? Now, let's go ahead and have an illustration of here, all right? Okay, so let's say the price comes off here, all right? Now, we initially have a push to the upside, all right? And then out of the blue, we have these equal highs, okay? Now, please mark this. So say we have equal highs, all right? Now, this is also a very, very important thing when you are confirming liquidity zones. If you have equal lows or equal highs, that's something very, very important and you need to mark it out. Now, what's happening in here is, at this area, we definitely have two traders. We have sellers looking at selling this at this point. Remember, we have support and resistance, we have demand and supply. So what's happening is most traders want to take their trades at this area here, okay? So you want to sell in here. Actually, what's happening is you have, say, your entry here, and then your stop loss just above this, this area here, okay? Which is pretty much a good entry. That's what most traders actually do. Now, what's happening is the price is going to come, all right, take out all these stop losses and then finally push to the desired direction. Let me redo that again. So what's happening is the market is going to come, wash out everything, take out everything, and then finally push to the desired direction, okay? So in here, it has literally collected all the pending orders that were here and then stop losses. Now, keep in mind, obviously, we still have buyers, all right? We still have buyers in the market who say, oh, well, I just need to wait for the price to break out of here and then I will continue in with my buys, okay? You just want the price to break out of here and perhaps ride that move, okay? So the market is literally going to wipe out everything and then finally actually reverse, okay? Same thing in a continuous market movement or a trending market. Say we have the same trend, okay? The price could actually come over here, all right, from equal lows, okay? Again, same concept, all right? It's forming an equal low here, all right? Now, most traders still want to go ahead and scale in buys off here. I mean, you need to have your buys in here, then your stop loss just slightly below here. And guess what happens? The price comes, okay, to wipe out everything first, all the stop losses that were waiting, and then push to the upside, okay? So this is, all right, liquidity sweeps, okay? Everything here, all right? You're being taken out. Again, keep in mind, we still have equal lows. Now, remember, I said it's very, very important that you need to look out for equal lows, all right? Oops. And equal highs, okay? That's very, very important with your confirmations. Now, let's go ahead and try with a downtrend. Again, let's say the price is initially pushing to the downside, all right? And then we have such a formation. Same thing again, we have this area here. I mean, it does show a reversal, so we need to come in with buys, okay? So buyers here. Okay, buyers coming in with stop losses just below, okay? Oops. All right. So you have your entry right around this area. You're targeting, say, this zone, okay? And with your stop loss just slightly, okay, below this key level. Again, what the price does is it's going to come, wipe out everything, and then fuel the movement to the upside. So it's very, very important that you understand these traps, because to be honest, you can easily solve a problem once you actually know the cause, okay? So if you do understand how everything happens with the markets, then you're going to be way too far better. Now, how should you even approach this, okay? As I mentioned, it's very, very important to always mark out this. Again, another thing to combine with this is demand and supply, okay? We shall actually see a live example and understand how it does work. You need to combine all these to actually find better trades, okay? Now, let's go over here to gold and see. Now, very first thing that you need to mark out is the market structure. Again, remember what I said, it's either an uptrend, all right, or a downtrend. You can also think of the sideways, but we won't focus a lot on it, okay? So you need to confirm what the market structure is. Are we in a push phase or a down, or rather a downtrend, okay? Now, if we could look at this example here, all right, this gold, we can start over from the H4 and see how the price has been moving. Okay. Now on the H4, we can clearly see we have an uptrend, okay? We've seen the price pushing to the upside. So that's very, very important to keep in mind, okay? Now over here, I could go ahead. Obviously, sometimes you'll always need to also mark out some of your key levels. You can mark this, all right? Mark out your swing lows and swing highs. That's also important. You could mark out that and have your other level right around over there. Okay, pretty much you can actually do a lot. Now let's go back to the H1 and understand what we were talking about, okay? Okay, there we go. So the price is already in a push phase, okay? That's very, very important. This is a very fast thing to understand. And then we also have a demand zone somewhere off here. Why do we call it demand? Well, you can see we had some insane buying pressure from here, all right? You can check on the H2. Just quickly confirm. All right, there you go. So that's a valid demand zone, okay? So the price go to that area and then bought off insanely. All right, cool, awesome. Now, next up, we do see the price pushing up to form this high over here. Well, I'll just use this. So you see the price from that high, which is really interesting, then came back to this, to form this low. Now remember, what we do expect is push phase, pullback, push phase, okay, to at least break the previous high. But actually, that wasn't happening. And let's check what's happening. Rather, the price actually breaks out, so we need to mark out this, all right? I'll go ahead and label everything. Now, the price breaking down here, okay, I'll also call this a bit of a change of structure. But again, break of structure, okay? Because initially you have the price pushing up and it does break out of this previous structure. to form actually a low. Now, most interesting part is we do have equal lows, okay? We have this this area here, okay? Decide to mark it with just a level like this, and there you go. All right, now what's happening is, for most traders, they will think of taking buys straight from this area. All right, say over here, or even over where the price is right now, say with a target up to here, or even out. Now, most traders will always have their stop losses just slightly below this key area, okay? Or rather just below these equal lows, okay? So you have that. And guess what's happening? The price is going to go ahead, wipe out everything first, okay? More often enough, the price is going to come, wipe out all these stop losses are just below here, and then finally push to the upside, okay? So keep in mind, at this area we have stop losses, okay, to buyers. All right, then we also have sell limits. All right, so in other words, there's money here. All right, there's money here waiting. We've already had buyers entering, they have their stop losses below here, just in case the price comes down. I mean, now what's happening is the price is going to come, wipe out everything, and then finally push to the upside, okay? Now let's go ahead and see how the price actually performs. Okay, there you go. So we have everything taken out, you can notice. All right, okay, there you go. So the price breaks out of these equal lows, taking out all the stop losses, and guess what? The price finally pushes to the upside. Now, another question should be, now, how do we get entries? All right, and this is what you need to look out for, okay? So say we initially had the price push down, okay? So we have equal lows. Now, this is what you must wait for, all right? All you need to see is for the price to at least form such a pattern, and then you'd be able to take that trade, okay? Let me adjust this. All right, there you go. Okay, so our interest is just this, all right? We just need to see this, okay? Now, let me go ahead and mark out everything. So we have that, and then we do have this, all right? This is where we have liquidity, okay? And then we also need to see this break of structure, all right? So your entry can only be around this area. Now it's double-sided. More often enough, the price could actually do this, all right? Some point, the price is just going to come. Once it breaks out, come for a retest at this exact point, and then take your entry. So more often enough, you just need to have your buy stop, your buy limits, okay, right around this area, and riding that move to the upside. Anyway, basically in here, what you need to do is use limit orders, okay, not direct market executions, okay? Now, it's very, very important that you always wait for the break of structure, all right? You've seen, all right, you've seen the price come down, okay, take out all the stop losses, and now we have that push. Again, as I mentioned, you should at least wait for the price to break above the neckline, come back for a retest, and then you'd be able to take that entry, all right? So it's actually very, very easy to trade liquidity sweeps. And to be honest, you really need to understand this, because if you don't, trust me, over and over and over, you will always become the liquidity to other traders, literally making money from you. Now, if you're interested in learning from me, go ahead and click the link down. You'll get access to the free Telegram channel, and you can also be part of my exclusive student community. I actually have about 1,000 guys. I've been able to teach both beginners and intermediate or even advanced traders to actually make money. And then more to that, you can also get funded with Funded Next. The link is just down in the description, and I'll see you in the next one. Remember to keep it less talk and more action always. Let's go. Cheers.